Welcome again to our short video series. I'm Deanne and this is...
My name is Tabitha. Did you catch me that time? Yes, good. Awesome sauce.
So today we're going to be speaking on the business side. So we did the individual tax returns before, so today we're going to speak a little bit about the business side of things.
Yes. So the main thing is we want to address the tax code changes that truly impacted the 2018 tax returns. I would say that corporations or business owners reap the largest part of the benefits from the tax reform that we just experienced. Would you say the same?
Yes, because they are now taxed at a flat rate, which is great. So instead of being taxed at up to 39%, they have a flat rate of 21%.
Corporations?
For corporations.
Yes. So let's talk about the QBI, the qualified business income. What type of entities first of all, what are the benefits of QBI? Like, what exactly does that mean?
Well, for the QBI, what was so great about this, if at the end of the day the entity was left with taxable income of, let's say, 100,000, instead of being taxed on 100,000, they automatically get a 20% exemption. So they would be taxed on only 80,000. So they got a straight 20% of a deduction, which was awesome.
That is huge.
Yes, it is.
Thanks, Trump. We appreciate it. Which type of entities qualified for QBI?
Well, that affects all pass-through entities. And when I say pass-through entities, I'm referencing your Schedule Cs, LLCs, S-Corps, and partnerships.
So C corporations don't qualify?
No, they don't.
Okay.
It has to be a pass-through entity. A C Corp does a tax return on its own and pays its own taxes, so it's not considered a pass-through entity.
Okay. So tell me about LLCs. What have you observed about a lot of individuals who form LLCs? What did they end up doing? How do they file their taxes? Do they elect to file it as a corporate return, or are they oftentimes still filing an LLC on there as a Schedule C? And what are the pros and cons of doing that?
Well, what I've found, Tabitha, is that a lot of people form a LLC and think that they're doing the right thing by, making this corporation, but they're still filing it on their personal tax return, making them personally liable. And when I say liable, if something goes wrong, God forbid, then they're going to be looking at, if someone sues you, then you're going to be personally liable if you put it on that personal return. So
I'm thinking of, let's speak about liability. So the LLC protects your personal assets from lawsuits, right? So anything that
to an extent.
So anything that you do business in the name of that LLC, those assets that are owned by the LLC are protected, right?
To an extent.
If
you have a great attorney, they can pierce that corporate veil.
Yes. So the personal liability that you're speaking about, I think about tax liability. When they elect to file that LLC on their personal return as a sole proprietor, you are personally liable for the tax.
And you're taxed at a higher rate.
And you're taxed at a higher rate.
So it would be beneficial for you to do a corporate return, a S-Corp, or a partnership return, depending on how your company is set up, because then you'd be taxed at that flat rate and still get that QBI deduction.
Got it. Awesome. So, great. You've covered a lot of my notes. So I just want to share with you guys that we are experts. We've been doing this for myself probably 20 plus years. And
so I would say collectively we have over 30 years experience.
Yes. So we could definitely advise you guys on the different types of entity formations that you want to structure for your business for different purposes. We could give you some great advice on that. And one thing about entity formation, well, I wish I knew this when I was in my 20s, but I believe in practicing now anonymity, meaning that I don't want my name or even your name on the Secretary of State's website. You don't want, if you got in a personal accident or something happened, you don't want people to be able to look your information up on the Secretary of State's website to learn of all of your assets. So we can help you set up your entity whereby we can keep your name off the Secretary of State website and all of your assets will be hidden to that perspective. So we could assist you in forming your entities, filing your taxes, and just giving you some really solid advice. Deanne, is there any closing remarks?
Just to say that, even though we are experts in our field, we're constantly learning, and we have other teams that we pull from. So we're getting knowledge daily. So I would say, yes, file with Smart Tax. Yes.
See our website information. You can visit us at www.smarttaxbiz.com. We'd love to hear from you, and we'll talk to you soon.